Great. So now we can get into the final section of today's conference. I promise you that it's not going to last more than 15 minutes, but probably you would like to last more once we're over with that. So I have the pleasure to have a conversation with Mrs. Silvia Pavoni. Silvia is with Financial Times. Hello, Silvia. She's the editor of The Banker. The Banker, for those of you who do not know, is the flagship publication of Financial Times. It's almost 100 years old as a publication. And also Silvia is the founding editor of a more recent publication called Sustainable Views. So we thought that it would be a nice idea, to be a bit alternative today and conclude the section by putting the spotlight on Silvia, a well-esteemed journalist, an expert in the ESG field. So we're going to have, a casual conversation on some hot topics. So hello, Silvia. Thank you very much for being with us. And let me just drop one thought. Since you're coming from media, and actually the title of this section is a media perspective, I was always curious about, how media relates to sustainability, to ESG in particular. What are the criteria that media is using to select topics to cover? In the previous sections, we talked about AI, artificial intelligence, and how it collects information. Media provides information to people. At the same time, there is academic research which shows that when companies are under the media spotlight, then somehow they're incentivized to take actions to correct their corporate and environmental profile. This is a recent research we have with our team. So, how do you feel about this? You are in ESG. What was the motivation for you to get into ESG? How challenging is it from a journalist perspective to be in ESG?
Thank you. First of all, thank you so much for having invited me, George. It's a pleasure to talk to you and to talk about ESG, this abbreviation that feels still very clumsy, doesn't it? And potentially we're going to maybe see it gone. I'm not sure what is going to replace it, but essentially, of course, what we are talking about is the fact that there are externalities that financial institutions, companies, but also governments perhaps haven't necessarily always known how to measure or considered in the same way in which we try to do now, but also how these factors are now playing a role in business, in finance, and also in policy and regulation. Now, the role of media. All of these things, ESG, sustainability, climate change, very much so, but also social, other social components, gender, inequality, race, all of that. Those subjects are increasingly being covered by the media. And obviously, I work in financial media. So financial media perhaps has been one of the latest areas of journalism that has started looking into this from a business perspective, because of course all of these other elements have always been important, but not necessarily being covered as a business story, as business stories by financial media or business publications in general. Now, things have changed. Things have changed if we focus just on climate because of the urgency of climate. It's around us. It's inevitable. We see it. We feel it. But also because of the wave of policy and regulation that has been coming out of various parts of the world. We're both in the European continent or region rather. Of course, continental Europe within the EU has been particularly active in this area, but even in the UK, where I am based, there are increasing rules, financial rules even, to look at, for example, the names that funds put on their funds, whether they call them sustainable and how should they call them sustainable. So there is increased scrutiny on that, but of course also we're seeing policy coming out of governments. So of course, media journalism is reporting on that. And I feel we are past the stage where we need to explain what climate is, even often what ESG is, what it stands for. But we are not quite there in terms, I feel, of providing information that is granular enough so that people in this area, people who are experts in this area, whether in the private sector or public sector, whether that information is actually useful to those professionals on it as part of their day, which is why we created Sustainable Views here at the Financial Times Group, because we saw that there was a gap in that, an information gap in that area. So we tried, and luckily it seems like we are managing to fill it at least a little bit with our content. So that's where I feel we are, but of course there is still much more to go to cover this properly.
So you talked about some interrelated terms like climate change risks, governments, investors, companies. So say we focus on climate change risks here. Do you think that investors really care about climate change risks? Over the past months, we saw the departure of some leading institutional investors like State Street, JP Morgan Asset Management from climate coalitions. This is also something that was mentioned earlier in the conference. Why do you think that this is happening? At the very beginning, institutional investors were very eager at joining climate coalitions. Now it seems that there is another trend. Is this happening because, for instance, investors realize that there are no returns from investing in ESG stocks? Is it that maybe there are some political pressures? What do you think that this is going on?
Yes.
ESG also seems to have been politicized in a way.
So we can also talk about the politicization of ESG, which is dominant, particularly in one part of the world, which is the US, as we know. So perhaps we can talk about that after. But all those alliances, all those great and grand commitments that came out, particularly after COP26 in Glasgow. And right after the creation of the Glasgow Financial Alliance for Net Zero, G-Funds, led by former Bank of England Governor Mark Carney, and those $130 trillion of worth of capital potentially being mobilized to fight climate change. Now, what has happened, and I'm also going to try to look back to what you asked me originally, which is the role of media in putting the spotlight on companies, whether that changes things. So a lot of enthusiasm about those commitments. And then, of course, as you sign up to all those, as those companies started to sign up to all those various alliances from banking, investors, asset owners, and the rest, then, of course, that kind of membership comes with also some other requirements and definitions. And then what I think, and what also these companies are telling us they found, is that they couldn't always meet those expectations, but they were being held accountable for those commitments, quite rightly. And so I feel that now, after the moments of galvanization for finance to come together and really publicly state that they are behind this goal, this huge problem that humanity has, individually, each companies are also having to deal with the practicalities of that. And I think that's the main reason why they're pulling out the ones who have from these alliances. And part of the practicalities is that, as you alluded to, there isn't necessarily a level playing field, to use a term that often is quoted in corporate speech, because of policy, because there isn't a global policy that determines, for example, a price of carbon. So if the economics of, for example, if you're an investor, the economics of the businesses that you're looking at, that you have in your portfolio change because of this policy, and that just changes, and so you don't need to change the way in which you look at those companies or those investments, and the way that you look at them is the same way that your competitors, your peers are looking at that company, then that almost solves the problem, because the rules of the games have been changed. If it is left to the individual companies, of course things become a little bit harder. In terms of risks, I think they do. Many of them, I don't want to say all of them, but I don't think I've ever come across any financier or any investor or any chief risk officer that would tell me that actually climate change isn't considered as a risk. In fact, all the chief risk officers or risk professionals I speak to, they all say that they are looking at it. It's a big challenge because of, again, the models are not there. Historical data clearly is not there. And of course, they also have to compete with a number of other risks that are coming at them from all angles: inflation, geopolitical risks, and all of that. So there is potentially a hierarchy risk challenge there. But I don't think I've ever come across any risk professional that told me we ignore this because it doesn't matter. As going back to the role of media, as those big alliances came together and as all those big companies signed up to them, of course, us journalists pay attention and take notes and write about it. And we go back to them to say, hang on a second, you said you were going to go net zero by that time, or you were going to reduce your exposure to fossil fuels, but actually it looks like you're not. So that, of course, is something that is not particularly pleasant for any company to deal with. It is also an essential part of democracy, of course, and the role of journalism. But it's interesting to hear that your research has pointed to a beneficial role of the media in covering those commitments. I hope it is true, because of course we are going to continue to do that, but then what we often see is that yes, there are some changes, but often the increased scrutiny more broadly ends up meaning that commitments disappear. And so instead of initially wanting to go net zero by 2030, maybe, okay, we're going to be more gradual and maybe we're not going to get there until 2050, or perhaps we're just going to present a more gentle definition of how we're going to decarbonize. So I see it in under both lenses.
It's very interesting. You mentioned that you have talked to, to whoever you're talking, they all mentioned that climate change is a risk for their portfolios and is a risk for companies. The question I'm thinking about, though, is whether they consider this risk to be of utmost importance, whether this risk is a systemic risk which threatens financial stability. So, if you speak to people like Larry Fink, for instance, the CEO of BlackRock, even though initially he was thinking, and he was stating in his annual letters that ESG is turning finance to another direction and so on. Nowadays, if you speak to him, he will tell you that let the market decide about how things are going to evolve. If you also talk to some leading academics like John Cochrane, for instance, he will also mention the same thing. If you talk to Christine Lagarde, on the other hand, she's going to tell you that no, climate change is a systemic risk. And now I'm thinking, say, a couple of years ago, when you had these very prestigious conference, Financial Times, the Moral Money one, Stuart Kirk, who was back then a leading figure in HSBC, mentioned that climate change is not a systemic source of risk. And 2 days after that, he was fired. So do you think that regulators should step in here? I mean, in research that we have conducted, other papers as well, so that investors do not care about physical risks. They only care about physical risks, and these risks are priced in the stock market only when the regulator steps in. So the regulator is very powerful here. He has a key role. The question is, do you think he should intervene? Do we need more regulation or less regulation when it comes to climate change risks?
Yeah. So on the investors, it depends on where they invest. If it is a real estate investor, they do care, right, about that. Also, it depends if it is an investor that looks at a shorter term time horizon or longer term. Because what Stuart was talking about, the famous comments about Miami going underwater and he was comparing in 100 years to his loan portfolio, whatever his exposure, his finance at the time, which was much, much shorter, about 7 years. So there is the investment risk, of course, is different that an asset manager or an investor is considering is different from, of course, the risk that a monetary authority is considering. So the two, a BlackRock may not necessarily care if the whole financial system of the world collapses. It's not their job anyway, right? So of course, it's not like they do not. It's not like they're not going to be affected if that happens, but they're probably going to look more carefully. I would argue. I would guess to the more immediate risks related to their portfolios. Now, the ones who are definitely looking at the systemic risks, because it is part of their jobs, are the financial markets and the banking regulators. And they are looking at that, as we know. So you mentioned Christine Lagarde at the ECB, but also the Bank of England, the Fed, and many other central banks, which are also part of the network for greening the financial system, which is this very big international group of central banks and monetary authorities looking exactly at this, looking exactly at the implications of climate-related risks on the stability of the financial system. Whether what they're putting together with the green stress test is helping at the moment, I'm not quite sure. But certainly regulatory attention is getting people to sit up in their seats, of course, and look more carefully at all of this.
So how about governments? I mean, governments, we're talking about greenwashing at the level of an investor or at the level of a company, that a company does greenwashing. How about the states, the governments? What's your impression here? For instance, there is this narrative that countries tend to switch to a transition to clean energy. At the same time, still, for various reasons, the economies heavily depend on fossil fuels. Likewise, if you look at countries like Greece, Spain, Italy, which also heavily depend on tourism, the model that they have adopted does not necessarily promote a sustainable growth, in terms of sustainability. So is it the case that governments really, care and they want to take care of climate change risks, or is this just a marketing type of narrative?
Yeah, well, I don't know if they actually do not believe or are not convinced by those policies. But it is apparent that, of course, when there is a crisis that is felt as more urgent, then funds and I guess attention is directed, which we've seen after Russia's full invasion of Ukraine. Because of the subsequent energy crisis throughout Europe and the return to fossil fuels, to alternative fossil fuels-based sources. This is true for other countries in tough times. And of course, the fossil fuel industry, should also be said, has and continues to enjoy quite high subsidies. The IMF did released some data a few months ago. I'm sure you've seen it, and it shows that actually those subsidies are still alive and doing really well. And what we're seeing, though, in other, specifically in some parts of the world, is that those subsidies, in a way, are also being made available in good amounts for green technologies, for the green economy. So we can look at the US with the Inflation Reduction Act and the I think it's around $370 billion being made available either through tax breaks or some other forms of subsidies for green companies. The response from Europe and the response also from other parts of the world. This is to say that, of course, there are different levels of development of these industries, and we're seeing green technologies now being definitely commercially viable, but perhaps parts of there is always a discussion about storage, there is discussion about networks, so those parts perhaps need strengthening before governments may be able to switch off completely from fossil fuels. At the same time, you may say, if we want to be cynical, well, why bother? It's much easier to just go with fossil fuels that is there without spending so much money on these other green subsidies that maybe voters perhaps may not see the results of in their sort of political cycles. So it's a tough one, but I feel again things perhaps are improving in terms of the availability of of renewable energy, of alternative energy sources. The grid, I hear, infrastructure is improving, that there is investment across many parts of the world in this sense. And perhaps we need to go back to the issue of incentives and strong policymakers who convey the message. And perhaps, again, a big part of this is communicating and sharing information about the importance of investing in these areas. So policymakers who do take the decision, politicians who do take the decision to invest in those areas, even if perhaps they feel that they may not necessarily win the political favors of voters right away. So that's where I feel we are.
So just as a final note, since we are unfortunately running out of time, just speaking about politics, just as a final note, how do you view this, politicization of ESG, especially in the US, Democrats versus Republicans, climate friendly versus anti-climate? Why has this occurred in the first place?
Why? I'm not quite sure why. I guess it was an easy thing to attack, perhaps being seen next to the sort of woke capitalism that Republicans tend to mock and dislike. In fact, the term woke in this case, of course, is being used in derogatory terms. There is also, though, I have to say, some sympathy because around this affection around ESG, because it's a clumsy association of different aspects of economy, of business, of investment. And there is always so much confusion around what it is and what do we mean by that? Is it, again, risk? Are we talking about returns? What are we talking about? And of course, the various layers of regulation, particularly coming out of Europe, have made things much more challenging. The endless requests for disclosure have been quite burdensome. Of course, we do want transparency. We, as in everyone, people enjoy transparency. Investors and businesses would all benefit from more transparent, of course, markets and having more precise and useful information. But of course, what has been coming out of Europe has often been burdensome, and not just Europe, actually, because there have been many other non-monetary, voluntary disclosure requirements. And so you find people working within sustainability divisions in businesses, within investors, banks, that often struggle to deal with all the weight. So I guess that's why ESG was so easy to attack, potentially, or to use in that sense in the US. But I feel there is a sort of disaffection for the term also in other parts of the world.
Thank you, Silvia. I think we have reached the end of this conversation. Thank you very much for being with us and for sharing your views. And this is actually the end of this conference, of today's conference. I just got some statistics here for your information. I see that we have more than 950 registered delegates. So thank you very much for joining us from all over the world. Let me briefly, once again, thank our sponsors, our platinum sponsor, EY, our gold sponsors, Alpha Asset Management, Grant Thornton, Piraeus Bank, and Prodea Investments, our supporters, the University of Piraeus Research Center and CFA Society Greece, our media partners, the Athens and Macedonian News Agency, Athena, Business Daily, Capital, Euro Today, Forbes, Next Deal. We also thank C'est La Vie. And let me once again thank the wonderful IFFR team and EBRD. This conference required a lot of preparation. Especially, I would like to thank Mrs. Maria Giuli and from the University of Piraeus, Mr. Stavros Efthimiou. I would also like to thank the Department of Banking and Financial Management of the University of Piraeus, under the auspices of which the Institute of Finance and Financial Regulation operates. And last but not least, I would like to thank you all for joining today. I hope you found the conference fruitful. Many thanks to all our speakers. Please do not forget to spend 3 minutes of your time to fill in the evaluation questionnaire. Your feedback is very useful to us, and we do take it into account. This has been the 4th consecutive year that we're running this conference, and we're looking forward to next year's one. Please stay tuned. We're going to upload the videos of today's presentation on the IFFR site in the coming days. In case you have any further feedback, please do not hesitate to contact us. And with that, I would like to say goodbye to all of you. Have a nice day or a nice evening wherever you reside. Bye-bye, and look forward to seeing you soon. Bye-bye.